Let's start with the Fed. That's the big issue really for fixed income investors. You think actually a rate hike might be later rather than sooner?
Yeah, we've been saying that for quite some time, that we think that actually wouldn't be surprising if it happened in early 2016. So I think as we get closer to that date, it's becoming more of a possibility.
So what does that mean in terms of the way you're approaching fixed income investments and chasing yield like so many investors have tried to do?
Yeah. Well, it means that we're being very cautious in terms of how much investment, how much risk we're taking in terms of interest rate risk. Even though we're saying we think rates are going to stay low for a certain period of time, you're still not getting paid. The risk reward for being wrong on that bet is becoming increasingly more difficult to put on. So where we think it's better to put on risk is looking at risk products, looking at credit, high yield, asset-backed securities, where you take on more credit risk rather than interest rate risk.
How would you describe the valuation in high yield right now?
We like high yield. We've liked high yields for a number of years, and we continue to have an overweight in that. I think you have to be very specific in terms of your security selection. We also said that early in the year that this is going to be a year where security selection was going to be key. And I think going forward that's going to be increasingly important.